Hello, it's Tom Heuser with the Heuser team in Realty One Group, and today I'm with Dan French with Academy Mortgage.
How you guys doing?
So, just wanted to take some time, and a lot of people are just, as you're going through potentially thinking about purchasing a home, you start thinking about the financing and the money that you need to get this. So some people you're a first-time home buyer, or maybe you just haven't bought a home in 5 or 10 years, and to be honest, the process changes every 6 months or a year. There's new stuff needed. So today I really wanted to kind of sit down with Dan today and give you a really good idea from a professional, what is needed in the mortgage process, and what is the difference between like a pre-qualification letter and a pre-approval. So Dan, could you kind of tell us a little bit what determines the path that a borrower will take for getting a pre-qualification or a pre-approval?
Yes, Tom, thanks. If you're watching this video, you're probably in the market to buy a home now, or maybe considering maybe in the future. When you have a lender come into play, it's usually in the process of getting a pre-qualification letter. That's very key, and you have to go through a series of steps and a process to get that. So when you're looking for a home, the first thing your realtor is going to ask you is, have you been pre-approved yet? So the difference between pre-qual versus pre-approved, there is a subtle difference. That you go to a big bank, a lot of big banks will have you come in and they'll issue what's called a pre-qual. And what that is a very snapshot view of what you have, documentation, and really just a very bland or a very small amount of information that they collect from you, and they still give you that pre-approval letter. Well, they don't do all the details behind the scenes. We have a slogan that says garbage in, garbage out. So to get a pre-approval letter, you would want to talk to your lender or a lender, give them all of the information, have a complete application taken. That's really the most important key, which most people don't bring it to the attention. Most lenders don't bring that up. The application is really going to set the foundation and the tone for that file. So the better and more information that you provide, we obviously want to collect paperwork to match up what that application has. Things like self-employment, things like tips, sources of income that we really don't have consistency on. Those are the big hurdles we have to get around, and a lot of times they don't look at the big picture. They don't see all of the things that could come up. You have Schedule E, which is your tax returns if you're a corporation, how much ownership's on a partnership. How many properties do you own, and do you have them? Some people don't disclose them. So you have to really take a look at all of the things that you have to get a thorough application, and that's why it's a pre-approval. Pre-approval is the most important thing you can do, because once the pre-approval is done, you get the full application, you get all of your ducks in a row. I'm going to issue that pre-approval to Tom's team, and then you guys are going to go out, and that's your ticket to go. It's your golden ticket to go out and find a home.
Yeah, and I couldn't agree with Dan more. I mean, just being in this business and doing the volume of transactions that we do and helping buyers buy homes, the last thing that we want to do is, I know a lot of buyers think that the first step is getting out there and looking at homes, but the reality of it is we need to make sure that everything is set up with your lender and the pre-approval is ready first, because it's a tough market out there right now, and just about every home out there is getting multiple offers on it. And when we give through a pre-qualification letter, unfortunately the listing agent and the seller are not going to accept that, because they've got 5 other offers on a property. So they want a letter like what Dan is talking about for pre-approval. They want to know that this is a strong buyer, that if they accept your offer and they let the other 4 offers go, that Dan's going to get this deal closed because he's done all the legwork before going out there and putting in an offer. And even more so on the real estate side, if you have a house that you have to sell first, you're going to be really upset with us if we actually sell your house and you're not pre-approved to buy your next one, and something works out to where you become a renter. So regardless, we want to go through that process. Dan, is there anything else that you wanted to mention?
No, I mean, we're going to talk about, there's some things you want to go over with me here. Maybe you can go on a few of those and see if you can talk with me on those questions. But one of the things, like we said, is that garbage in, garbage out. A lot of people they're very hesitant on starting the process, and really pulling your credit, doing all these things up front is going to save you time, could potentially save you money. We'll talk about that on these questions. So go ahead with any questions that you might have for me, Tom.
Yeah, how is the market treating borrowers getting pre-approved?
So it's a good question, because you as a borrower out there, the market right now needs a thorough. They need to have somebody that's going to be thoroughly looked at, being a full approval, because you risk an earnest money deposit. Okay, the earnest money deposit there, and Tom can talk about this a little bit. There's a contract with timelines on everything. If I'm not doing my job, or something's not taken care of, or let's say we don't meet our close of escrow, I'm actually somebody that has control on your file. If I don't do my job up front and we find problems later, you're now risking the money you put down. It's called an earnest money deposit, and that's to hold that property to say you're a strong buyer. So have you had that problem too, Tom, with that?
Yeah, we have. I mean, fortunately, we do enough business that we do require the pre-approval,
Right.
And a lot of them, of course, are from you, Dan. And that's really important for us because, like Dan is saying, we don't want you to lose your earnest money deposit. And, we don't want to push you through this and the seller through this and have things not work out in the end. So we would rather just take these proactive steps, from the beginning. And, Dan, I was kind of looking at my notes here. I do know that some, borrowers or buyers, they're really hesitant on allowing you to pull credit. So can you kind of talk about that?
So everybody has that stigma that if I go to a lender, I don't want to pull my credit. It's going to hurt me. I'm going to be affected. You have the ability as a consumer out there to shop your loan if you wanted to. Government put in place a loan estimate so you as a consumer can go out there and take comparables against lenders and see what the fees are. So when you look at that, and from my perspective, I might not earn your business, and Tom's going to do a good job in trying to earn your business, but the point is you have to be able to allow a lender to look at your information. If you really want to find out if you're getting a good deal, you have to have another lender pull your credit. Now, if you pull it within a 14-day period, it's called a soft hit on your credit. So realistically, that's what you want anyways, because if you go to another lender, and let's say a lender and you're shopping rates as well, which 95% of people do, if you're shopping your rate, you want to do it relatively on the same day that you're doing that, because now the market changes all the time. Interest rates change, pricing changes. So the same thing, somebody might quote you today. If we do this on 2 days from now, you might not get the same pricing. So it's very important that if you're going to do these things, it doesn't affect you because it's a soft hit on your credit. So it's important that you have these options. Exercise your options.
Yeah, thank you, Dan. And I don't want to take up too much of Dan's time because I know he's busy here in the office. But one of the things that he just said is critical when you're going to shop those rates. We see this happen all the time, whether it's with our lenders or with every lender out there in the marketplace. They do change. I mean, rates are changing. Interest rates, let me be specific, are changing 3 and 4 times a day in many cases. So when you go out looking for a house for 30 days and then you wait 2 weeks to actually lock the rate, that's 6 weeks difference. So you definitely want to go with a lender that that you can trust, that's still going to give you that same low rate that they did before.
Right.
So Dan, thank you. For today.
Thanks, Tom.
I appreciate you
taking
the time to meet with me today.
Yeah.
Thanks for watching, and if you have any questions, please reach out to myself, Tom Heuser, or of course Dan French. Thanks for watching.
Thank you.